Investment climate in Nigeria. I have with me Marvelous Adele. She's a senior associate at Party and Partners. Thank you so much for your time today on the show, Marvelous. And I'll first like to get a sense of how investors are navigating the Nigerian investment climate currently.
Okay, thanks for having me. Following the rate hike, most recent rate hike, we've seen, first of all, in the equity space, we saw sell-offs, people selling, investors selling off their positions just to raise liquidity, probably to move into the fixed income space where we've seen yields become better across that's FDN securities, across the bonds, across the treasury bills as well. So we've seen also for placement with banks as well. So generally, in savings and investment space, yields have become more attractive, and it's more fulfilling for the investors. So we've seen them scouting out for attractive levels across the FGN securities.
But what's the opportunity for equities then?
For equities, it's more of a holding game for equities, because whatever is happening, it's like a global trend. So it's not just that, oh, this company is not doing well or not. It's just a global trend, and how investors are willing to hold on, whether or not investors are willing to hold on to these securities within the short period.
Yeah, because when you look at the macro side of things for Nigeria, we're dealing with high inflation, and also we're also dealing with weak growth here. And for investors, what does this tell investors looking at the structural dynamics of Nigeria?
Well, with Nigeria, we are more at the receiving end of global issues or global trends. So investors looking out for now, fixed income is the more like a safe haven where you can actually get better yields given the most recent rate hike. So I think most investors actually move to the fixed income space and they're FGN securities, so there's high security on your investments as well.
Yeah, because when you look at the policy response we've seen so far, 250 basis points response in the last two meetings from the Monetary Policy Committee. And what else do you think needs to be done to make the impact felt?
I think it's a time game. We'll have to wait. We've seen government also introduce new taxes on commodities that were not taxed before, or even increasing tax levels. So the authorities are actually fighting this inflation issue. And it's important to know that this inflation is not just a Nigerian issue at this point. It's more like a global thing. Most economies are facing this inflationary pressure, and it's on the back of the COVID pandemic as well as the Russia-Ukraine crisis. So we're more trying to manage it, trying to curb it really. We've seen taxes, we've seen rate hikes, we've seen government grants to farmers as well. So I think those actually just a time game. With time, we'll see the effect of these policies on inflation as well as the economy.
Yeah, because the IMF says they expect countries to keep more raising rates up until 2023, where they feel that this impact will be felt. But on the fiscal side of things, what more needs to be done?
Well, aside the taxes, it would just be aside increasing taxes for Nigerians, it would be to curb spending, like curb government spending. So probably you wanted to build some bridges, or just majorly to curb government spending, because inflation is about supply and demand. There's no demand for money. Reduced demand for funds would actually lead to reduced liquidity in the system and everything. So it's just having to curb government spending generally.
Because now when you look at the FX story now, yes, we're seeing this high demand for FX in Nigeria, but how do you see that interplay between the demand and supply dynamics, and how the central bank is trying to intervene here?
That's in the FX space?
Yes.
Well, so for a long time now, I think since the pandemic started, we've actually had reduced foreign investors in our investment space. So that actually contributed to the reduced FX supply. And it's something that we've been fighting since 2020. So we don't really have much say when it comes to our FX supply. But then trying to curb demand, we've seen the CBN come up with policies just to try to keep the little FX we have within the Nigerian space.
But looking at risks down the line, yes, 2023 is an election here. And I'm trying to understand how you are assessing the political risk in this environment.
That's with the FX.
Yes, the currency risk as well as the political risk as it's linked to the FX.
Oh, currency. So it's more, we are more of in a managing space now. So there are not really 5 steps to take to actually eliminate this currency risk. We've seen the euro and dollar already, they're already at par. As a few weeks ago. And the Nigerian naira is not, we've seen most people, we see most people traveling, most people needing PT and everything. There'll be reductions to that as well. Given like the election next year, it's not really clear on what more the CBN can actually do, because really they're playing all their cards, and it's still, the issue seems to keep revolving around the same supply issues.
And I'm looking at the bigger picture for FDI now. How are you interpreting how Nigeria is being seen as a destination for investment?
I think the major issue then was that rates were actually declining. That's I'm speaking for the fixed income space. Investment rates were declining, but now that we are seeing with the interest rates hike and improved yields in the space, hopefully before the end of the year. But then it's quite dicey because next year is an election year. So typically before an election year, we expect foreign investors to leave the market until after the election. So it's quite dicey expecting them back at this point where our yields are actually improving. So it's just a wait and see game.